All right. Good afternoon. Scott Henderson, shooter. And hey, we're going to go over some charts, try and have some fun here. Okay, let's just do a quick bit of housekeeping. And of course, at the end of today's presentation, please, of course, do review our disclosures. All right, so there's an article that we have here, and I actually like this format. It's a little more work, but it gives us a tree kind of thing. So what I've started to do is add a quick link. So this is the 1-minute stock analysis. So I wanted like a central home, like a chart book. Okay, not only can you search the name because we're using the larger text, which is how Substack organizes stuff. At the top of the article, I've put up a quick, so you can just pull the chart right up. Basically anyone that we've looked at, and boom, it's going to pull that whole flash up. I want to get there with the chart book, but I want to make sure before I jump in that direction that this is functional and you guys kind of like it. So spend a second and visit that for me and give me your feedback. All right, let's jump right to the SPY, the S&P 500. My opinion hasn't changed. The only thing this looks like is this could be peaking drive 1, peaking drive 2, and 3, and then we get a back test. But at this point, because of the lack of follow through, I think this ends up being a chop zone. And that's a little challenging because that's just going to eat away at premium, which is why I started trimming most of the long exposure that I had, because any additional pullback just was going to decay that premium. And that makes it quite challenging here because we could be in this flat. I'm just going to sort of give you a visual of where I think we could be. Or I don't think it lasts more than that time horizon. Change the color so it's visible. However, it could extend out, May, easy, June. So we could just build out this flat, really go nowhere to the upside and not necessarily take out the lows for a bottom. So we could just sort of get stuck, kind of stagnate. And that would not be unusual. I would be surprised if we don't get a pullback like this here and test this low. That just with how the breadth, when I do my scans and searches every week or every day, the breadth on open interest percentage change went to 0 for 3 days. I've never seen that. Even in all the other drawdown periods, it's just like the funds went hands off. They stopped looking at extended premium. On top of that, if you go out 60 to 150 days in the dates and strikes, there's nothing there. It's a ghost town. So that is where I'm hesitant. Whenever I see something that's unusual, out of the ordinary, I look at it like a tell. Well, what's it telling me? Well, it's telling me they're not adding position. Now today, the little pump that we've gotten really has been chasing like 8 names. Like Netflix is on everybody's radar, has a huge amount of flow, but yet the chart screams, I'm not done, which we'll go through that one in a second. So that's my thought on the S&P 500. NASDAQ is not much different. We have more of a potential of a drawdown here than we do in the S&P 500. I see this as an ABC structure up here off of this high. So equality would take us back to this shelf here. We just change that chart color so it's more visible for you. So that's my thought as we come back and test this shelf, or we actually fill out and our head was in over here, which could be. Head and shoulders, I don't find them very reliable. At least I would rather trade 3 peaking drives or 3 flushing drives because I have a very high conviction, like more than 70%, that the outcome will materialize in one direction. That's not necessarily the case with head and shoulders. I put it in the category, hey, it's a 50% strategy, which is almost everything is between 30 and 52% if you look at all the strategies on the planet. So I want to know where I have the edge. And, even though I have it on the chart for a visual, for the larger time frame, it's not something that I really consider to be tradable. Now we break below this 600 right here. It's kind of a line in the sand. Then I think we should chase down to about 550, 560. I think we have a shot there. All right, let me switch over to some of our names. And since I started off with Netflix, let me jump over here and just go to the Netflix chart. Now, the visual that I have here, I'm looking at a reversion to the mean play potentially. So I'm seeing A, B, or C. And just somebody confirm quickly that you can see my chart. So it gets interesting around 65 bucks. I like it down around 47, just simply the way that looks. And that structure, we're seeing it in more tapes. So, as we see, you tend to have this collective grouping. When we have risk on, everything chases the same way. All the indices go up, okay? It's the inverse when every starts getting predictive. The names that ran are the most likely ones to get a reversion to the mean. Now, to me, a reversion could pull us back to $30. And honestly, the chart looks like, especially when we come out to a monthly and we look at the bigger picture here of how extreme and euphoric this push was. Clearly, we're extended off of the other pullback. Then we look at the fib levels from this retrace. It's going to pull up a quick tool just to give you a visual of the concept here. Is we went back right to the 78.6. I mean, about as technical as you can get. So if that's a similar case here in this pullback, right? 78.6 is going to be down here around $41. So that's my 2 cents. All right, let's look at SMCI. Now, I've started a starter position in SMCI because it got constructive down here. This is on my radar with AI infrastructure. This is a name that once they start the builds, in other words, where they actually have the power issue resolved, which is one reason I want to focus on metals and the mining support structure first, and then go to the infrastructure. However, there are certain names that are ready and close. SMCI is one of them. So I'm expecting once we get confirmation of the move back up above 35, I think we're going to head back towards about $54. So I want a piece on this. I want to figure out how to hold this, even if we take a little bit of heat. If it kicks me out with a close, which, by the way, even if I really like something, I am technically trading my risk management across the board. If my stop gets hit or I cross my failure line, my invalidation line, I'm out. I will wait for it to reset up, and then I will look to re-enter. That is the strategy I'm running with because it works. You just have to be religious with it. Once it washes through your book, you'll find that, at least my opinion is, it adds about 20 to 30% to my gains over time. All right, let's look at Planet Lab. Now, I took profits on this today simply because of the look. However, I want it back. Because I do think this is I think this outcome at the 161.8 is shallow. So if assuming this is corrective and we get our pullback to maybe 20, I'd like it back to $24. I think we got a shot back here at the 2618 at $46. I just like the thesis with space, and I like the way it's responded. It's a really solid structure look, so I want a piece back on. All right. Now, Geo, it's just grinding. It's done nothing wrong. It's working to some degree. I haven't gotten the nerve to add any kind of calls. I'm still in common shares on this one, which I think we're going to have a lot of positions in common shares because my experience thus far in 2026 is that premium is decaying so quickly that it's really hard to lock in your gain. And that becomes challenging, especially on the long side versus selling premium on the short side, because at least it guarantees you some kind of position. You can really gauge your risk. Whereas on the call side, if you're wrong or the market doesn't follow through, it literally can become worthless overnight. So that's the thought. Just Geo's working. It has crossed our confirmation line at 1787. So we're just trying to keep a position on there. NVO is working. However, I want a little bit more of a pullback. I'd like to get back to this shelf here, roughly around 53, 54, and then we'll be chasing that up to about 76. UPS is working. I expect it to completely get out of this. Even though we're starting to run into some resistance, structurally, I can see this pushing back to 175. And this is a general. So if the economy doesn't die, this is my opinion on the generals, like DE and UPS, as an example, they will recover, just like Walmart. If Walmart gets a pullback, it's going to recover because it's too big of a piece of the staples of what we use in society. Plus, now we have a solid trend. Look at how that grinding trend is going. That's very positive. So I still see peaking drive 1, peaking drive 2, peaking drive 3. So I may take profits because this is a common share position and then try and buy it back at the shelf, which is the most likely spot at 102. That's sort of my thought. Now, rare earth is really hard to gauge. We are experiencing true scarcity, which is actually occurring in metals, and then at the same time, a flight to safety, and the central banks are buying the metal. The problem with that is if we get too heavy on the long side, when these come off, they're going to come off fast and hard, and it's likely it takes out your gauge. So FCX, I'm going to try and take par around 64. That's my mindset. And then on that back test, when it gets back to about 56, which we're starting to see a little buyer exhaustion here in those wick, at least on the weekly candles. However, it's still, in my opinion, is confirming. It's not the higher high in RSI. This was the higher high, so this was our confirmed high. So this would be a divergent high. But structurally, when you look at the peaking drives, it's right in the perfect spot for us to have a clear extension to 70 bucks. That's my thoughts. So at this point, we're still trying to hold. All right, potash, working perfectly. We might take a little profits around 35. Just really depends on how the market's acting and what volume looks like. Right now, it's solid volume. Still got that kind of squeezing look coming into this. So I expect a launch here. You know, and we could be much more euphoric on the push. Right now, I'm being conservative and saying the 100 fib, but we literally could push right up a little more aggressively towards the 1618, which is structurally correct for Elliott Wave. So, you know, it potentially could push to 57. So here's another name that I want to try and hold for that reason. All right, ONDS. Now, we put some calls back on this, but ultimately, I think we target 20 bucks, and that's the game plan. All right, now, John Deere is working. Now, one thing about this Greenland thing, now, a lot of people, and I wrote, I don't know how many of you read the little write-up I did on Greenland. And, you know, there's going to be some infrastructure tailwinds that you know, come into play, and John Deere is one of them, because the heavy equipment used for mining, and you know, we were in it before this, so it's like an extra catalyst. Now we're completing General 2 as far as the candle, so I'm suspecting we get up to at least 550, and we see how brave I am as far as holding that beyond it, because I generally, with something like DE, I like to get my 15 or 20%, and then, you know, hey, I'm going to move on. But I might actually try and hold this up back to about 600, which I think would be fantastic. But it's just, I like the idea of having that additional catalyst. All right. Mosaic has done nothing wrong. It's just building that base. I think we've put in our low. Obviously, if we close below this, and this is, I'm trying to get to a, you know, I'm one thing is I get bored with my charts, so I have to think of different things. But so I'm putting these invalidations down here. So this is when the thesis for the trade has ended. So that when we cross that invalidation line, as far as I'm concerned, whatever we were thinking as far as the trade strategy is dead. All right, just want to clarify. And then when we come in the chart, I'm putting, well, where are we confirming the move? Well, we confirmed the first leg really right down here. So we've already confirmed that we're heading back to the upside, that we have a potential of a bullish move happening. So we're in good shape. It's above that. You know, hey, now we want to see if we hold this shelf on the back test. You know, that'll define our strength on whether we want to keep this if we happen to get any noise. All right, NTR. Again, Nutrien done nothing wrong. You know, I don't know if you've noticed this in the balance of what I've kept. I'm only keeping what's working. If it's not working, I cut it. I may want to buy it back, which is the yellow list on the right of my screen. We're going to go through those in a minute. These are the names that are on my shopping list, and they're probably going to be about 10 more by the time I get through this week, because I want to see how we close this week after this little rout that we've had. I think that sort of defines on whether we continue head towards all-time highs or we actually end up within a little period of a bear market, which I don't think it'll be that long if we are. I think it'll last until the Fed does something a little more aggressive, because with jobs coming off, and they're not going to let jobs come off and the stock market come off at the same time. It's too great a number without announcing something to fix it. So that's just my take on that. NTR, I see it back to about 81 bucks. Again, as long as this shelf holds, you know, roughly around 65 bucks, I think we're solid building out this wave 3. This is the perfect kind of impulse we want to hold. Realize it's going to be 25% longer than wave 1. Always prints that way. So that's why we want to hold. We started a position in a lab. May or may not been early. However, I think this shelf grinds and we get back out of here. You know, I think we do head back towards these highs at 264. And I just like the look of it where we were. As far as structurally, I know this is in a flat, but it was a name that I want to own and want to hold. So we, of course, entered in there. Now, EOSE, just little resistance here. Probably should have completely closed it instead of keeping the runners open that I have at this point. But I have confidence that we break above this high. And if you look at the structure up to 32 bucks, those are, I'm looking at this as a primary wave. They are worth your time to wait for. The question is, how big of a position are you going to hold through any heat that you might get? Right now, we're not catching any heat. At this point, I'd like to add back some calls, but I'm going to wait probably till next week. Then I'll decide whether I'm doing it. All right. AST Space Mobile. Well, our exit was timely. I like it back, on this shelf. This is on the, when I'm doing like the metals and mining or the AI infrastructure or even the 2030 survival blueprint that I'll be doing, you'll see this format on each chart. And the reason is because we want the name because of the thesis, but we don't want to overpay. Now, it's not likely that I enter a name when it's in that aggressive zone because I want a very defined risk. But at the same time, I don't know what your book is. I don't know how your book is balanced. Some of you may have a higher cash position and want more exposure to a specific name, maybe in space like AST, but you'll start seeing this on those charts that I produce. Unfortunately, it's too time consuming to do for every chart, but we're going to try and keep up with that. So clean risk means that's where I like it, 74 to 67. And obviously it gets back to 50 to 42, then, it's like a back the truck up kind of moment. All right, now BAM hit my radar on my scan for a 50% back, which by the way, that scan has been producing 2 to 3 names a day, which is like diddly squat. Sometimes I've had 30 names on those scans, so I've been able to pick. But I like the look here at the shelf right where we're at. All we need to do is have volume to switch in another direction. We have that squeeze look. RSI is diverging a little bit off of this low. So as long as we don't take out this low, the thesis of heading back up, and it confirms that we're heading back into a bull trend at 56. Now, Intel, I just absolutely missed it. And actually, I'm disappointed because I was watching it and I'm looking at it here and I don't even recall why I didn't put a position. And honestly, that's one of the most frustrating things in what I do is when you're tracking something and you're watching it and you can see it building out your case and then boom, you don't pull the trigger for whatever reason. And then you're sitting on the sideline twiddling your thumbs and just watching it run and you're like, shit. So I want to back test. All right. That's what I said. $44. I'll take a shot at chasing the rest of that leg. However, Intel has a huge upside potential within the AI infrastructure play. I think they start acquiring vehicles that they don't have that helps on that build side. And not going off base for a second, but as far as AI infrastructure, what they're doing now here in tech is they are buying any commercial parcel that have direct access to natural gas. However, when I looked at the natural gas, there's really only a couple pieces there. The turbines that they use to create the electricity, GE basically owns it. Well, they are sold. They are now taking orders for 2029. So they're sold out. There's no excess capacity. There's none. There's no secondary supplier, nothing. And I've spent quite a little bit of time looking for that. So what we're seeing now is the acquisitions of this land for more data centers, which will not be built out till 2029 or 2030. That's challenging to enter at this point, so we're early. So I think the AI infrastructure is maybe we have a time gap, maybe a lot of 2026 and then maybe even the first quarter of 2027. So I'm hoping we get a little pullback in these names like Intel, just because of the market dynamics that gives us a little heat. Boom, we get an entry and go, or we get a market pullback between now and that gives us that little edge to get back on board. All right, now SMR, I cut yesterday just because it wasn't going. There's no reason I want it back already. However, I want the market to settle. I want to see what our close is by the end of the week, and I might just buy it right back. The great thing today is it's so cheap to buy and sell stuff. Unless you have a specific thesis while you're holding it, then don't hold it, just cut it, and then you can always buy it back. And the differential is you're not holding the heat there. So now I want Marvel, except for I want Marvel back in this 77 to 63 zone. That's sort of my thought. Might try a little piece right here at weekly trend support. Okay, hello, I already want it back. Especially when you open up, like this morning's run, they were really pushing to bring this market back out. I don't know if it sticks or not. Right? It really smells like a bull trap to me. But this is a name that can launch You just by history, if you look at it in the past, it likes to launch. And, once this consolidation is laid out, we got a little piece of it at work. Didn't continue. We basically faded right around 115. But still, I want another piece on OKLO just because it's on my radar. Also, I shouldn't have sold BABA, but we did. So, hey, nature of the beast. Now I want to pull back, maybe 157, and then I still think we have a shot back at 200. Hopefully I don't miss that whole run, but ultimately just with the drawdown, the gaps down, the mindset was there's too much of a chance that we end up into a bear period, and I didn't want to run that heat. I didn't want to give up the gains that we already had for the year, so we decided to book the gains, sit on the sideline, and then look for a re-entry. All right, AMSC, that's another name I want too. Done nothing wrong, but again, same thesis as SMR. It wasn't really producing. Looked at trying to pull risk off just because of market dynamic. So we're looking for an entry here. It breaks back above 33, I'm in. Outside of that, it'll be based on market condition. BK, I want a piece on this. I'd love a back test of this wick. I don't know if it's going to give it to me, but I want a piece on this just simply because I think there's a chance this may not be XABCD, and this ultimately could be a breakout here. This could be a new impulse. In other words, peaking drive 1, peaking drive 2, peaking drive 3. This was our corrective leg. So this is the base of an impulse, is the likelihood. So I like the structure here because quite often the wedges, 70% of the time, resolve to the bullish side. They don't resolve to the negative side. So that, as far as a conviction on a setup or a strategy, that's one reason I like this particular setup. Now, ELF worked. We're out of it at the moment. And this is another name. I made note, and I think it was either chat or in notes, that I was second guessing all of myself because, and it turned out to be the right decision because we opened up green on Monday. Otherwise, we wouldn't have. We probably would have been a little bit in the red. Instead, we opened up at about 11% up, which I can't complain about. So structurally, I want to piece back on this. Again, this is going to be market dynamic. Our main shelf is right here. So it gets above this 97. I'll jump right back in. Otherwise, I'm waiting till that market dynamics clears a little bit, and then we will look at a re-entry there. Cisco looks really good here. I mean, as far as this back test, as long as this shelf holds at 72, I think we're heading to this 86. Now, again, this is AI infrastructure. You can't communicate to fiber without systems. So it's part of that dynamic. All right. Now, Rocket Labs, we just cleared it because really what this candle was doing, it hit confirming trend support for me. All right. And again, I was looking for any reason to trim, so we trimmed. That's it. All right, looking at Adobe. I really like this at it's right now it's failing, but we get back down to this shelf. I expect it, because it really is a great spot for a stop run right around 257. So I have a big interest there at 257. So Taiwan Semiconductor, we get any kind of pullback at all because structurally they're going to be printing the new Tesla chip, which is coming pretty quick. Elon is going after the AI infrastructure in a new way. So that has actually a lot of upside from a manufacturing standpoint, because basically they're going to print some of the components, and then Tesla and its factories are going to put the pieces together, very much like what they've done with the Tesla cars or even the robots. So structurally, I wouldn't be surprised if they build a facility in Austin just to build the Tesla chips, because they're so significant to robotic and autonomous cars. If they can actually migrate to their own product, I think that has a huge upside, not only for TSM, but also Tesla. All right, USAR. Now, this is related to Greenland. This is a rare earth that will benefit, which I noted in there. I want any pullback to this ledge to give me reason to enter once that market dynamic or that noise in the market quiets down. I want a piece on that. CRML is the same thesis. However, I'd like a pullback maybe to about $11. Now, they are directly connected to Greenland, okay? They are the processor that really pulls any minerals out of Greenland. So if there's no deal with Trump, right? Chances are any gains this has gotten are going to disappear pretty quick. So you just want to keep that in mind. All right. LAC looks good here, as long as it doesn't close below this 431. So that would be your invalidation mark, roughly right there at 435 or 437, whatever it is. Now, MP, I'd like to get a piece on MP. The only thing I don't like about MP is the way this looks right. So structurally, regardless of the macro or the micro, I still need my technical look to convince me. In other words, I need a reason to do that. After we've picked a name for whatever reason, fundamentals, micro, macro, does the chart support a technical entry or not? And with MP, no. Okay. I would rather take a shot at UUU as an example, only because of the structure of UUU and how better it's connected to what's really been running. So I get real interested in MP back around 38, but my mindset is that this shelf may get tested if we have any kind of dry period as far as them not being able to ramp up the production in AI or the minerals that are required to do that. And we hit this quiet period because we run into that power infrastructure issue. So that map, I really don't have a clear visual of how that's going to play out. However, 5 years down the road, I'm fairly confident that we're looking at a 40 or 50% growth minimum annual in AI infrastructure. So that's one reason I want to try and get positioned in that direction. All right, let's look at Uber. Now, this has been all over the internet as, hey, it's time to buy Uber. I would agree. Looks pretty good right here. Invalidates below this 778. I think we've got a shot back about 118. It clears this, what is it? 88, that's going to confirm a trend change. So I like the look of it here. All right. Hote, I guess is how you pronounce that. I'll never get that right, so don't try and explain it. All right. I mean, a very aggressive leading diagonal. Here's a look. So, the challenge is that the breadth is here. So quite often what happens is you don't get too much of a better high. You get a fairly deep retrace and you sort of do this. So you end up finding a trend resistance channel up off of this high, which is not necessarily equal to this high. So, measuring it this way is not the most common outcome for a leading diagonal. It's more of a consolidation kind of look where it builds out this flat top and then it rejects. And quite often it's going to retrace at least to the 618 or the 78.6 back. All right, let's look at Oracle. It's broken here, clearly broken. We're in an impulse down here. Hopefully you're not still holding it. So, I'm looking at this as equality to me is right down here back at 129. So I don't get interested till we clear this shelf right here or close to this shelf. We have this imbalance zone right below there, which comes in right about here. So that's where you get the full interest. However, notice that I have this marked down here. Part of it is the confluence in this band where we kept rejecting lower. So this is a pretty aggressive sell. If it doesn't save itself at this particular ledge, so you got this 145. 145 needs to hold. Then we got a decent shot. That could be the end of it right there. I mean, it could be quick right to there. Right? Or 145, excuse me, roughly right there. That would be a good spot for us to bounce. We also have some imbalance there, so you have some confluence a little bit higher. But this misses. It really does open this lower side here. I don't want to carry that risk in this market. I would rather take a cleaner structure than try and hold that kind of risk. And that is just my mindset going into 26. All right. So look at team. I got to come out to the monthly on this one simply to give you a visual. So we have a decent amount of sell side imbalance that'll hit down at this level right here. I don't know that holds though. Doesn't look to me like it's going to. And structurally, this is very similar to the way MP looks. AB Street structures are, when they're potential reversion, wrong one again, when they're a potential reversion to the mean, that the dynamic is you have more risk. So, equality is way the heck down. It's a penny stock. Not necessarily that it'll become a penny stock, but the most likely outcome is right here at $83 because then this A was the elongated A, and then we had an equal C or equal B, and then we have a shallow C. That technically is correct. That's laid out with Elliott waves. So I would think that is the most likely outcome. So any overshoot, we want to drill down and look at what RSI is doing. But right now, RSI is still confirming to the downside. So it's telling us it's not done. That old rule, hey, if it's confirming, what are we looking for? At least one more lower low in price with some kind of divergence in that look. Doesn't necessarily need to be confirming, but some kind of divergence. All right, now I need to jump down to the daily. It's not done, still bleeding. I think it could go to 14 bucks as far as Figma. That's just my thought. Once the structure broken, that was clear signal to head the other way. Now we had one additional request for PayPal. Let me take a look at that one. There was something on PayPal that I'm not recalling right this second. There was something on PayPal news-wise. We're right at this. I mean, we're at a good spot. My thought was 54, 55 was a good spot to give it a shot. RSI is still confirming though. This is on the weekly. Let me go down to the daily. I want to see what RSI is doing. RSI is still confirming. Go down to the 4 hour. RSI, that's kind of still confirming. So I would think that we got one more low. You can base that off the 4 hour. 1, 2, 3, ABC, ABC, ABC. So I think we've got at least one more low, maybe like this, towards the middle to the lower side of the band. Then that might be your highest risk reward to give it a shot. All right, any other questions, folks? It's really risky chasing it here. But one thing that I noticed in the flow is that there were a huge number of, where was it? Make sure you're seeing. We had 41 500K contracts come in on SLV, but we had 335 million in gold puts come in. GLD. So they are playing the spread on between gold and silver here at this point, which makes it very challenging for me to enter a position. All right, let's look at this LTBD. See if we can get it pull up. You sure it's LTBD? I'm not getting it. I'm going into SILJ. Try one more time. Junior. We got lots. We got a huge amount of upside. So, just huge. We really do. I think I need to add quick links over here for an impulse wave, huh? I keep clicking the wrong one. So structurally, we're heading to at least 43. Shallow retrace, 1618, but this could extend to the 2618 easy. Notice the breadth of one. So, reality is this is probably a more likely target, which is going to accelerate us up. So 2618 is viable target at 66. All right, Robert, you want to try the symbol again? Going once. LTBR. LTBR. Light bright. Good spot. Actually very constructive right here. You have clean impulse up. We throw the fibs on this, tell you about where it's going to go. Good look. So heck, target is going to come in roughly about 60 bucks to the upside if this impulse fully builds out. Not exactly clean on the retrace. Just this structure. Hold on, I'm going down to look at it 4 hour. I would classify that as divergence though on the weekly. We have clear divergence on this low. Look at the daily. Structure's good. It's broken above that confirmation line right here. Looks good. It's worth risk. Maybe, I don't know what the options look like. Hold on, let me look. A little thin. Got some at 25, 1500 open. A little thin. I'd probably be more inclined to sell the 1750s, except for 1.8. It's not a great premium. It's about 35% annualized. Chart looks good though. I'd like to see more flow there, on the options, especially with this kind of flat in the volume on the daily. However, it does look like it's been squeezing this entire leg. So its structure, it looks like continuation. It's a good spot to give it a shot. Okay, anything else, folks? Going once, going twice. All right, great trading. Until next time.